in terms of credit reserves, they're preparing for peak unemployment of 5.8% in 2024. Is this all just being extremely conservative because that is the safer thing to do? Or do you think that there is a belief that rates could go to 6-7%?
I don't think he would have said that if he doesn't think about it. And then you think about all this Fed speak that we've seen, really, that got started with Lori Logan last week and Kashkari. And I mean, these folks seem really determined to break the back of inflation without acknowledging the fact that inflation is likely to stay more elevated than they had hoped prior to the pandemic. And the likelihood now is that whatever you think like normal rates are, they're going to be much higher for longer. And whether it's, tops out at 6 or 7% for Fed funds. I don't know how the stock market closed unchanged. There was a world that we used to live in the stock market, where if someone told you that the CEO of the largest bank with the most credibility on the planet said, be prepared for much higher rates, that means for longer, and equities could just stay bid here, that seems very odd to me.
Yeah, Mike?
Yeah, I agree with Dan wholeheartedly here. I mean, we've got a lot of things sort of working in concert, in tandem, that I think are going to pressure this. First of all, there is just the supply and demand for money issue. I mean, I do believe that, the inflation genie is a tough one to stuff back in the bottle. So for those that are expecting some kind of rate cuts in the near-term future, I just don't see that happening. And of course, that's the short end of the curve. On the long end, basically, if you start to see some credit tightening within the banks and there's still demand for it, that's obviously going to create a problem. And there's something else, too, which is that when we think about what a normalized rate condition should be, most people are only looking back with a lens that goes back to the GFC, which is not a realistic lens to use. I mean, if we just go back a little bit further than that, the rate environment in which we currently find ourselves is not so extraordinary. And I think that's really what people should focus on. We got away with very cheap and plentiful money for a decade plus. And that just can't go on forever. And I don't think we should expect it to return anytime soon. And that's going to create a lot of pressure in a lot of areas.